When you look at what the EU leaders are agreeing on, what will that actually do for the European economy? It seems like it's peanuts compared to what some of the countries actually need to recover from COVID.
Francine, the most important thing what this deal does is reduces the risk premium for the periphery countries. So I think the cost of borrowing for those countries will come down, and that will basically, it's already beginning to happen. We've seen that. And that means that the financial conditions for those countries reduces. Once the risk-free rate reduces, you also have a pass-through into the private sector borrowing costs. So this is the biggest benefit of this deal, and it opens up the door that in future, even while this is not seen as a permanent deal, it will open up the door for the group to take up more such measures in future. So I think this is a very big positive step in the right direction for Europe.
Chetan, can you frame strong euro in finally a weak dollar, or is that not likely to happen?
So our team, Matt Hornback and team, are forecasting the euro to strengthen, and that's because we are expecting the data to be strong in Europe relative to U.S. And at the same time, this deal, which has just been sort of looking like it's getting done now, will help reduce the risk premium on the sovereign assets in European Union. So both those factors is making Matt Hornback feel strong about the euro.
How have you adjusted your global call? I mean, we've got the festivities in Europe. We've got all sorts of challenges in Asia, some serious commodity issues in coffee, cocoa, and the like. Can you amend to any sense of optimism on international economic growth?
Well, we have been optimistic, as you know, Tom. We have been talking about this cycle seeing a V-shaped recovery. Yes, it's a deep V, but it's a V. And we have been talking about global growth coming out to pre-COVID levels by fourth quarter of 2020. That's pretty a positive, upbeat view already.
Chetan, if I finally look at the U.S. economy into the election, I know Ellen Zentner's been out front on this. Do we see, I mean, forget about V-shaped, but is there any sense of economic growth when Q3 GDP is reported right near the election?
Well, Q3 will be actually the strongest rebound. As you know, Q2 will be down quite meaningfully because of the bulk of the impact for COVID coming in through in that quarter. And so we'll definitely get very strong growth in the third quarter. But I think that should be expected.
Chetan, how do you view the possible second waves and lockdowns? I don't know how difficult it is to model as a chief economist, but it seems crucial when you look at GDP on what kind of economy, how it can function, or whether we'll go into lockdown or partial lockdown again.
So, Francine, we are looking at two things. One is the spread of the virus and its impact on the economy, and the second is stimulus. Now, as regards the spread of the virus is concerned, what we are observing is that the link of the economy to virus is changing. While what had happened in the first round is we had seen aggressive lockdown at stay-at-home orders. Whereas, as you see right now, country after country and various states in the U.S. as well, we are not seeing states taking up aggressive stay-at-home orders. We are seeing them taking some controls or restrictions which are related to in-room dining or indoor dining, but we're not seeing aggressive stay-at-home orders. And the reason for that is that in this round, we are seeing lesser hospitalizations relative to new cases. We are seeing lesser fatality relative to hospitalization. So the impact on the economy because of this has been smaller. And so we think that the sequential activity will continue to improve even while new cases have risen in the U.S. and in other parts of the world. For example, when you look at the high-frequency data points like auto sales, credit card spending, retail gasoline demand, all of those indicators are telling us in the first 2 weeks of July, you have still seen progress over the month of June, despite the new cases rising in the U.S. significantly.
Chetan, when you talk about more, policy stimulus being forthcoming, will it be enough to deal with deflationary pressures, or how do you see that working out?
Well, I think that would be that's a second and big part of our framework, and we are expecting the U.S. to announce about $1 trillion of stimulus by early August, and there is upside risk to this. It could be as high as $1.5 trillion, and this is going to be important because in case you have aggressive restrictions taking place because of COVID spread, then you would possibly have to have this support coming in from the fiscal side, especially the unemployment insurance payments to the unemployed. And we think that that will come through. It might be lower in size versus the $600 per week. It could be lower number, but it will still come through. And there is a possibility that we could get a ad hoc payment, which is on the lines of $1,200, which was given in the very first instance. So this stimulus is going to be important because that will ensure that even if consumers can't get out to spend, they would be able to spend online, and they will not be risk averse enough that it takes down the sequential activities.
Do you worry about deflationary pressures, or is that a conversation for next year?
I think right now we are still looking for a reflationary trend. So on inflation outlook, we are looking at it to evolve in 3 stages. The first one, which is in the near term, inflation prints are going to be weak, which we call it as the disinflationary phase. And as the economy is recovering, which will be seen very clearly from the third quarter, we are entering already in that reflationary phase now. And then going forward, by second half of 2021, we think inflation in the U.S. especially will start to look like it's getting closer to 2%. And then in 2022 is where you will start to see inflationary pressures, when we expect inflation to cross 2%, which is the Fed's goal. So this is the way we are thinking about inflation outlook, Francie.